Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back to another brand new episode of Bishop's Move here on WSI TV. I'm Jordan Bishop and I'm joined today by Lea Warren. How are you doing today, Leah?
I'm doing great, Jordan. How are you?
Good, thanks. So today's topic are the keys to the castle. But first and foremost, I want to remind you to go on over to WSITV.com. You can sign up for our free daily newsletters and you also get free instant access to that WSI vault. So Leah, why don't you jump into today's topic for us?
Yeah, so we're going to be talking about real estate. And the big question is why real estate? And first off, the real estate market has been strengthening ever since the start of the last decade. So we've had 10 years of solid growth because it really bounced back after the recession that we saw in 2008.
Right.
So that means we have a really strong foundation to look at real estate. And second of all, we were just talking before this episode about how everything that's going on with the coronavirus is not necessarily affecting this sector, especially in the U.S., because no matter what, people need places to live.
Exactly.
So.
The problem here too is, just because the last recession was triggered by real estate, people think that's going to be what triggers the next recession or bear market. When in actuality, and we won't get too far into it, but I think it's corporate debt that's going to trigger it. But again, that's a separate topic for another day. But yeah, there's as you're going to see soon, there's cheap opportunities here as well.
Yeah, absolutely. So the current trajectory, in addition to the history of strength, there are a lot of key factors that are further strengthening this market. Currently, mortgage interest rates are at the lowest that we've seen in years. They're resting around 3.85%, and they're only expected to rise to about 3.88% by the end of 2020. So really great mortgage rates if you are looking to mortgage.
Right.
So this is great for home buyers. It's also good for sellers.
Exactly. Or if you want to refinance as well.
Absolutely.
It's a good time.
And home prices are on a steady climb. They're expected to increase about 2.8% this year alone. So that's a big increase this year, and they've been increasing at an even faster pace over the last 5 or 10 years.
Right.
And then this year, the biggest group of millennials will turn 30, which may sound like a strange statistic, but that is usually the age when people start looking to invest in their first home.
Right.
And that means that we're going to have the biggest group of young people on the market for homes that we've seen in decades. So.
Yeah, definitely. I mean, really, what drives home prices up is demand, right? So as they're getting more expensive, make sure you jump in, and we're going to give you some affordable ways in just a second. You don't have to go buy a new house all of a sudden. But that's what increases the high demand with the supply that doesn't keep up is what increases the value of these homes.
Yeah, absolutely. And that is a big thing that's happening right now is there is a huge demand for housing, but there's not that much supply. We're going to get to what's happening there in a minute. So there's that housing shortage, and you know how that supply and demand situation works where that jacks up the prices. If there's no supply and there's high demand, then automatically you can charge a whole lot for what you have.
Right.
So in the future, we're seeing a lot of building opportunities because there is that high demand. Home builder confidence is at an all-time high this year and is expected to continue. We're seeing a lot more mortgage applications. They're up 20% over the last year and expected to increase even more this year and into next year. And builders are expected to expand production by a minimum of 10% in 2020 alone. And then in 2021, we can expect more than 1 million single-family homes to be built. So building is the next big thing when it comes to real estate.
Staggering numbers there. And there's a simple way of also keeping track of this, throughout the next decade or two. You don't have to look at charts. You don't have to look at numbers. I mean, of course, we love those things here. But all you need to do really is hop in your car, go drive around. Do you see construction projects coming up? I mean, that is a sign of a healthy real estate economy.
Absolutely.
I know where I live, I'm constantly driving through construction. So if that's happening in your area, you may find that that's a great area to invest in.
Absolutely. And then on the other hand, if you see lots of older houses or buildings that are big for sale signs that aren't being sold off, that's a sign that real estate is possibly in a little bit of trouble.
Right.
But we haven't been seeing much of that anywhere in the U.S. Pretty much everywhere that you go, building is on the rise, and there's a high demand for housing especially. So we're looking good with real estate.
Yeah.
So how to get your share? We're not telling you to go buy a house, as Jordan said. I mean, if that is where you're going with this, it's a good time to buy a house.
Yeah, if you've got the cash, absolutely. I mean, again, we're going to give you a more affordable option in just a second. But even if you were waiting to take that last step into an investment property, right? Like Leah said, mortgage rates are low, and I do believe the Fed is going to cut rates again one more time. And if that happens, I will be refinancing everything I have to a lower rate. Take advantage of it. Make sure you get that fixed rate, of course, because adjustable variable rates will go up when the Fed funds rate goes back up. But it's a great time to refinance, invest, and borrow money for cheap.
Yeah, absolutely. So really, really strong time for really great opportunities. And as always, we want you to be able to take the hands-off method for making a lot off of this. So as always, we're going to turn to stocks. We have a couple examples of the sort of stocks that you should be looking for. In general, the U.S. real estate market is looking really strong, so make sure to look at any stocks that are involved in that area. We have a couple examples for you today. This first one up had a 78% increase in the last 3 years, and it's just a really strong chart. Yeah,
I mean, a beautiful chart. I want to just point out, if you see any charts that look like this, jump on them immediately, because this one has been on the rise. And it's stepping up so consistently as well. There's not much volatility. Of course, we've seen some in the last few months, but it's not crazy. I mean, it really doesn't move a whole lot. It's down 5% this week, but that just means a great buying opportunity for it.
Yeah, absolutely. And this is Agree Realty Corp, and it's ADC. And then our next one up is CCI, and this one has, again, seen really, really strong and steady movement. And it's actually been up a lot the last few weeks.
Right.
So.
Yeah, absolutely. And again, similar action here. This one's a little choppier, but again, it moves a little more, which means there's probably more opportunity for bigger profits. And what's nice about this too, and you may see this as you're looking through stocks, is usually if a sector is strong, you'll find a few good charts that look similar, like we have on these last two. For me, those are usually a sure thing to jump into.
Yeah. Absolutely, and this is Crown International. And then our last one is AMT, and it's American Tower Corporation. And again, this chart looks very similar to the last two, which is a good thing. This is the kind of chart that you should be looking for if you want to invest in the real estate sector. And it's just got really strong stepping motion. We've seen especially it picked up in the last year or two. This one's seen a 137% increase in the last 3 years.
Yeah, I mean, that is a huge gain there. And as we see back in December, it took a bounce from around $210 all the way up to $260. So a really nice gain on that one. And it looks like it could be lining up for another bounce again. As Leah said, another clean chart that looks similar to the other two. So another great pick here, I'd say.
And then just to give you kind of an idea of what it would look like if you had invested in these 3 years ago. So you would have made $3,163 off of ADC for 100 shares. You would have made $7,624 off of CCI for 100 shares, and you would have made over $13,000 for AMT for just 100 shares.
Yeah, not a bad take on that AMT, but I'd be happy with a $3,100 gain as well. So
yeah,
three great
especially
picks.
for just a starting of 100 shares. It's not a lot, especially if you bought when it was at its low in 2017.
Right, absolutely. And again, you're not buying a house. You can buy, as Leah said, 100 shares. You could buy one share of these companies. You're exposed to the U.S. real estate market. You don't have to go out and buy a house unless you want to, which I think would be, there's great opportunities out there. But this is all from your own couch with barely any risk,
Yeah, absolutely. So again, look for charts like that. Remember that the American real estate market is looking really strong. I think that's about all that we have for you this week.
Yeah, absolutely. So thank you so much for bringing this to our attention, Leah. Another unique angle on a somewhat volatile market that we've seen in the past couple of weeks. But sure, I'm sure we're heading for stability.
Yes.
And again, look for these opportunities like the real estate market, the U.S. real estate market here. Thank you so much for joining me today.
Of course.
We'll talk to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.